Which way of trading do you think is going to reduce your losses, increase your win rate, and increase your risk to reward? What's going on, family? It's your boy Roms, and today I've got a video talking about how we reduce our losses while increasing our win rate and increasing our risk to reward. So I have many requests about doing a hard time frame analysis and how to get my bias, okay? And thing is, understanding the bias and understanding the draw on liquidity on the high time frame is what enables myself and what enables others to reduce their losses, increase their win rate, and increase their risk to reward. So what I'm going to do now is I'm going to show you what I look for on a high time frame, and I'm going to do a top-down analysis from the weekly time frame down to the M1 and look at a couple of trade ideas from the beginning of December and to see how things played out. And what's interesting about this one is that I actually put this high time frame analysis or top-down analysis in my Telegram group around the beginning to the middle of December on Euro USD, just to show my thought process and to show how I look at the market and how I break things down, okay? So you can jump on the Telegram and look at the link that's in the description and you can see what I put in the Telegram group. So let's go through the breakdown right now. So what we have here is Euro USD, and this is the weekly time frame, okay? As I'm breaking this down, I will look at this as, we've got the weekly sell side liquidity, okay? Weekly sell side liquidity. And because what makes it so powerful is that when you're understanding what's happening on the high time frame, what you're able to do is avoid trading against the high time frame, because I'm sure you've heard the saying on multiple occasions that the high time frame is king. So if that's the case, it's important that we don't get too hung up on the lower time frames and we understand what's going on in the bigger picture, and we understand what's going on the 4 hour, the daily, and potentially even the weekly, depending on your trading style, okay, to understand which way prices are going. Otherwise, you're always fighting against the wave. What's the point fighting against the wave when you can ride with it? Why not ride the wave? Imagine if you was a surfer, you're not going to try and surf against the wave. You want to try and ride the wave so that you can surf. And it's the same with the market. You want to be in touch with the market. You want to be moving in the same direction to increase your win rate, to reduce your losses, and to increase your risk to reward. Okay, so what we have here is the weekly sell side liquidity, which has been taken, okay? And we've had an aggressive shift back up. We've had a change in the state of delivery, and we have this nice imbalance and fair value gap that has been created. But let's go over to the right and look at the price action at the beginning of December. So what we've got here is, again, you've got this trend line type liquidity here, and you've got price inducing these lows or sweeping these lows. Let's look at that again, weekly sell side liquidity, or you can call it daily, depending on how you're looking at it. Probably you could say daily. And then you can see, again, we had a nice reaction to the upside, okay? But this is the weekly time frame. So we know we've had the inducement to the low. We've had these lows being induced. What are we looking at next? We're looking at a bullish move up, right? So the question now is, where is the next draw on liquidity on the weekly time frame? And yes, for me, the next draw on liquidity on the weekly time frame would be, if we're going to remain bullish, would be this fair value gap up here. And for me, a fair value gap at the minimum. If not, then completely take out the high. So I would mark out this as my weekly draw on liquidity, and I'll also mark out this imbalance or fair value gap as well, just to show that this is where I believe price could go. At this moment in time, price had a reaction from this rejection block. Sorry, not on this time frame, but on this wick and this price action here, and we've come back down. Okay, so what's interesting now though is where price is at this moment in time. So when I was doing the breakdown in the Telegram group, this is where price was roughly, right? And I was looking at this price action, and you can see that on the weekly time frame, all the price action is filled, okay? So there's no imbalances, there's no fair value gaps, there are no inefficiencies. So what does this mean? It means that price doesn't really have a reason to go any lower than this on the weekly time frame. So we've had the inducement to the low, we had the liquidity that's been taken out, and now we're looking for our further targets in the bullish direction, okay? And in my opinion at the time, it hadn't been hit yet. So now we're looking at this, but okay, so where could price react from? If we're currently bullish and we believe that the bullish target has yet to be hit, where could we react from in a bearish sense? You know, so what bearish point of interest could we react from? And on this time frame, the only place could be this potential order block for me. So I would put that as a, sorry, can't type. I would put that as a bullish order block on the weekly time frame. All right. So as you can see here, at this moment in time, this is obviously in replay mode. Price, you know, has wicked into the order block, tapped into the body perfectly, and it's responding. We can't quite see how it's going to play out at this point. Of course, this is in hindsight, so I know how it played out. But like I said, I did it in my Telegram, so go have a look. So if we go down to the daily now, because this is when we start to get a bit more interesting, right? It's where we try and find our trade setups. We don't trade based on the weekly. We don't even trade off the daily or the 4 hour or necessarily even the 1 hour necessarily, right? For me personally, I go down to the M5, the M1. And the highest I'll trade off of is the M15 if it gives me a good risk to reward, depending on, you know, the setup. However, going to the daily time frame, and let's have a look at what we're looking at here. So again, we had the weekly or the daily lows that have been taken. Okay, we had price come down, and then price had given us a nice market structure shift or break of structure, however you'd like to see that, and then price went higher, as you can see, and here we had the weekly draw on liquidity, which was the fair value gap on the weekly time frame. I'll put weekly fair value gap yet to be filled. Okay, we had a reaction from this wick here, massive rejection block, right? And then price had come down into here, which was the weekly order block, as I've marked out here. But what else do we have now? This is now the daily time frame. So this is now giving us more clarity. What else do we see on the daily time frame? So what we see here now on the daily time frame is a daily order block, right? You would have heard plenty of times before, you know, the saying that the market is fractal, and it's absolutely true. So we've got a daily order block. The market is fractal, okay? So within the within the weekly order block, we had the daily order block as well, okay? So this gives us even more precision on the lower time frame than a weekly. So, you know, you could even take an entry based on this, the top of the order block, and take it from there if you wanted to, right? But again, you know, I'm an intraday trader, and you probably are too if you're watching this video. If you're not, then, you know, you can take trade based on the daily order block. But if you are, then, you know, you can go into the lower time frames, which I'm about to do. So we can see here, we've got the daily order block, and we had a perfect rejection with this wick. You know, the wick tapped into the daily order block, and then it's rejected beautifully, right? So now we're looking at, you know, maybe price is looking to reverse potentially, you know, when we're looking at, you know, this high in particular as the next draw. But even before we get to this high, all right, what's important to know is, okay, so say that we are able to get a trade in this low discount zone here, right, based on the 4 hour range, right? Let's say we're able to get a trade here. The question is, where is the target? And the target would have to be initially, before you get to the high, right, the first target on the daily time frame would have to be this level here, because you've got you know, internal range liquidity, and you've got the daily fair value gap. And I'm not saying that this daily fair value gap is going to hold, but what I'm saying is, depending on the time frame that you're trading on, depending on the time frame that you're taking your trade based on, that, you know, determines your target. See, the thing is, if we were trading here, yes, we could take the trade based on the weekly target, because we're taking it off of the weekly order block and the weekly point of interest. So we can hold it to the weekly target, which would be, you know, this initial fair value gap. And then for me, if this fair value gap doesn't hold on the weekly, then I'd want this high to be taken as well, as a following draw on liquidity. Weekly, I'll put weekly. I'll put second draw on liquidity. So you guys know what I mean by that. All right, so it's the second target, right? So this will be the first target, and this will be the second target, okay? So based on the daily time frame, we'll be looking at this as our first target, and then we'll be looking at this high as our second target on the daily time frame. daily high. Let's put second drawn liquidity on the daily, okay? But remember, if we're believing that the weekly drawn liquidity is up here, it means that this daily time frame drawn liquidity, the second drawn liquidity, should actually be ran. That should be taken, all right? So let's go down into a lower time frame even further. So as you can see here, if we're looking at this now on the daily, right? And we've got our daily points of interest that we're looking for the reversal. And we've got our daily and weekly drawn liquidities and targets that we're looking for, as a target and potential reversal zones to take sells from. Would it be wise to try and take sells from zones like here on lower time frames, or here, or here? Would that be wise? And the thing is, it can be done, especially if you've got the experience and you've got the right trading models and you've got the confirmations and you know how to ping pong and you know how to take trades on an intraday basis. But for those of us, or those people that are constantly taking a lot of losses, or they're finding it hard to find the right bias, or they're just taking so many trades and they're finding that they take some wins but then they take too many losses that wipe out their wins, it's important to understand that you want to trade with the daily bias. You want to trade with the daily drawn liquidity. So if the daily drawn liquidity is up here and it's this daily fair value gap, what's the point in taking sells within this part of the range? It doesn't really make sense, right? So let's go down to the 4-hour time frame. So on the 4-hour time frame now, stuff's really not that clear, but what I can say is what we do have is what I'd call a strong high, which is when price takes liquidity and then creates a new low. That's what price has done here. Takes some liquidity to create a new low. So you've got a strong high. And for me now, if this level is broken, that then indicates a solid breaker structure, right? I'm just using certain terminology just so it makes sense to viewers that don't necessarily watch my stuff often or don't have to understand the lingo, right? So we've got that will give us a good confirmation, not a guarantee, keyword, not a guarantee, a good confluence that price would be reversing if this break of structure was to take place, right? So in the 4-hour, again, things get a little bit clearer. Maybe you can see, you got the 4-hour fair value gap up here instead, right? Just that gray box there, whereas the whole daily fair value gap was here or is there, right? So 4-hour, again, nothing's really that clear, apart from the fact that you can see the internal liquidity and the internal price action and the market structure a bit clearer. Down to the 1-hour. So 1 hour, it becomes a bit more interesting now, right? So you can see here now that price is giving us a beautiful response, okay? And we've wicked into the daily order block. We're way into the weekly order block. We've wicked into the daily order block, and prices begin to reverse. It's giving us that change of state and delivery because we're getting the imbalance being created and the aggressive move away. So this is a good start, right? And we're down to the 30-minute now. Again, I'm seeing the same thing, and the 15. And on this part, I'm actually going to speed it up a little bit here just to show you guys, because I've got a move that I want to just break down and show you. But you can see here that we're going into Asia at this moment in time. This is the 15-minute time frame. I'm not going to break down everything here because there are multiple moves in here, but I'm not going to break it all down. Right, cool. So what you can see here now is boom, right? So this wick takes out this high, all right? So like I said, I believe that this would now be a great confluence to show that, price could be reversing, right? See, the thing is though, I wouldn't necessarily be looking to wait until that level is taken to take a buy, right? Because I've got my high time frame points of interest with the weekly order block and the daily order block, and then I've got the price action, giving me that confluence that, price is giving me that accumulation type price action. Price is slowing down, price is building up, and it's giving me that curved look. You see it? Like price is almost, building up to then reverse. I would try and find a move down here rather than wait for this. But however, there were plenty of moves on the way up, right? But I wasn't because I said to you that I'm going to do a high time frame analysis. I just want to show you something that I saw in hindsight. I didn't see it at the time. I didn't take the trade myself, but just showing you how you could have got in if you spotted it at the time, right? So this is the 15-minute time frame. As you can see, it's already played out. But if we go down to the 5-minute, right? So price has tapped into the daily order block. It's given a beautiful rejection, right? And price has come back down again and it's tapped in again into the rejection block, so the wick itself. And then again, it's rejected again. But this is where it gets interesting now. So we're looking at, price potentially going to reverse, right? So you can see here that within this price action, first things first is that when you see wicks like this, long wicks, and you see that they're taking out other wicks, you can see that this is like a sweep of liquidity, right? So price has swept liquidity, but it hasn't taken out this low, which is the one that tapped the daily order block. And then we've got a nice market structure shift or break of structure, depending on what you want to call it, right? But what happens after that is even more interesting, because if you look here, I'm actually going to go back in replay mode. If you look here now, this is the 5-minute, right? Where could you, if you had to pick a buy trade, if you had to take one, right? You had to set a buy limit. Where are you going to set that limit? Where are you going to set the limit? Is it going to be like here on this imbalance fill? Just here? So you got the imbalance there. You're going to set it there? Are you going to set it here on this tiny little imbalance fill? Are you going to set it here on this little imbalance fill? Where are you going to set the buy, right? It's, if you, it depends on how you trade. It depends on where you set the buy. But what's interesting is what price does during this time and, afterwards, right? So you can see what happens here. Just now Asia, okay? But before even going through Asia price action, which I'm not going to go through right now, but I'm going to talk about what I spotted. You can see price break structure. Let me delete this, and I'll delete that. But price break structure, it respects these highs, but you can see here these highs. This is all built up now. This is all liquidity now, being built up as liquidity, right? It respects these highs, comes back down, takes out this low, and it takes out this low. But then it respects the inducement low or the sweep of liquidity where the liquidity sweep happened or the inducement happened. But what does it do? It mitigates or fills this imbalance on the 5-minute. So it takes out the lows. So take that out as a low, but then it fills this imbalance on the 5-minute. And what price does next is as clean as it gets, right? So I'm gonna mark this out. So I'm gonna mark out the 5-minute imbalance fill. And let's see what happens. So this is now the inducement low because we've induced this low and this low. We've mitigated the imbalance or filled the imbalance, right? We're looking for a hard time reversal. At the same time, we are, we're giving us trend line liquidity here. We're creating, equal lows here. And look what happens. Absolutely beautiful, right? So price comes in to the 5-minute point of interest. This is all the other liquidity stuff that, we're not going to get into all of it now, but you can see how price generates liquidity as it's getting to this point of interest, right? And it comes down. So you can see here, the price sweeps the highs, creates a low. Again, price sweeps the high, creates a low. And even as it comes in, price taps into the 5-minute imbalance fill. But even then, it comes down again, taps into it again, then gives us a nice break. And if we're going down to the 1-minute, you can see even clearer now, but it's even clearer on the 30-second chart. Right? Price sweeps the low, gives us a nice market structure shift. Right at this high. And then even takes out a couple more highs, which makes it even better. And then price comes down again, takes out this low. Thing is, this is the 1-minute. So on the 1-minute, you'll be like, what's actually going on here? But what price really wanted to do was mitigate this rejection block at the bottom here. Taps in, but on the 30-second, it's even clearer, because on the 30-second, you can see that there was actually a 30-second imbalance and also a volume imbalance as well. So 30-second imbalance here. If you had the foresight to see it, it was also late in the day, 6 p.m. GMT. So that's pretty late in the day, if I'm honest with you. But price is price. 1.5 pip stop loss. Realistically, it's you're going to put at least 2 pip stop loss. And then again, so to the 15-minute, shift it over. We've got our, we're expecting a break of structure up here. And let me make something very clear to you guys. Let's go on to the 1 hour. We've got our, our first target, which we're expecting a break of structure here. We've got the liquidity build up, right? We've got our daily fair value gap, which we believe that price will hit. We've got our daily high, which we believe price will hit. And I'm just going to play it out for a second. First, it hits there, and I'm going to go on to the 4 hour just to speed things up here. Right. Cool. Price goes. There we go. And we're pretty much the beginning of January now, and this is where price currently is tumbling at the moment, right? So I'm now going to just drag this to the weekly fair value gap. It's 161R. And before would the critics say anything here, I'm not saying you're going to take this trade and hold it there. Okay? I'm not saying that. But what I'm going to say is this. Let's go on to the 15-minute. So that's the first trade opportunity that we'll see based on, my model and the way that I potentially trade. However, I'm going to say, if you can take trades based on, in line with the daily and the weekly drawn liquidity, so the daily and the weekly bias. If the daily and weekly bias is bullish and you can take trades based on the way the weekly and the daily is going, and you can hold these trades. For example, say that you took the trade down here, right? Or you took a trade here, knowing that the target's here. Or you took a trade here, knowing that your target is here still, right? Or you took a trade even like within here, and your stop loss was even here, and you wanted to get just a nice 4-hour trade, right? With a 35 pip stop loss. Doesn't it make more sense to take these trades based on the high time frame drawn liquidity and the high time frame bias, rather than trying to catch sells and trying to catch these little movements like here? So you're trying to catch the sell there. You're trying to catch, okay, these ones here, super valid, and there were some good trades in here. Definitely you can catch these ones, right? But how many more buy opportunities are there than sell opportunities? Because the sells, look, the sells, if you go into the price action on the lower time frames, they're actually a lot harder to pick out as well, right? So you've got a few sell opportunities in here, but in comparison to the buys, which way of trading do you think is going to reduce your losses, increase your win rate, and increase your risk to reward? Obviously, trading with the hard time frame narrative and trading with the hard time frame bias, right? So remember, the hard time frame is king. Follow the hard time frame bias, follow the hard time frame narrative, follow the hard time frame drawn liquidity, and don't get too caught up in the lower time frames, because that is the way you're going to increase your win rate, increase your risk to reward, and reduce your losses. And in turn, it means that it will increase your profits. All right? Click on that video in the corner because I've got another trade breakdown for you. God bless, take care, and I'll speak to you soon.